Every billionaire interview says the same thing. Stay invested. Don't time the market. Cash is trash. And like a good student, you listened. You put everything into index funds, kept 3 months of expenses in savings, and did exactly what they told you. But Warren Buffett ended 2024 sitting on $334 billion in cash. Not stocks, not crypto, cash, the same asset he warns you about. And he's not alone. The ultra-wealthy quietly hold 20 to 30% of their portfolios in cash, while publicly telling you that anything beyond 3 months of expenses is wasted money. Something doesn't add up. Here's the truth. According to the U.S. Trust Survey, high net worth investors with over $3 million keep an average of 15% of everything in cash, not 3 months of expenses, 15% of their entire portfolio. And the wealthier they get, the more cash they hold. But your financial advisor, your investing app, every YouTube channel tells you to invest every last dollar immediately. You know why? Because they make money when your money is invested with them. A financial advisor charging 1% loses $1,000 per year for every $100,000 you keep in cash. The advice to stay fully invested serves their interests just as much as yours, maybe more. Here's what they never teach you. The wealthy use a strategy called buy, borrow, die. They buy assets that grow over time. Instead of selling when they need cash, they borrow against those assets at 3 to 5% interest. Borrowed money isn't taxable income, so they access cash without ever paying capital gains tax. When they die, their heirs inherit with a stepped-up basis, and the entire tax bill essentially disappears. You sell investments and pay 15 to 20% in capital gains every single time. They borrow and pay almost nothing. Same advice, completely different outcomes. There's also something called the poverty premium. No cash for a car repair means credit card debt at 22% interest. A $2,000 repair becomes $2,800. No cash for a medical bill means payment plans that add 30 to 40% to the original amount. No cash reserves means you're forced to sell investments at the worst possible moment, locking in losses and missing the recovery entirely. The wealthy never enter this cycle because they have enough cash to handle every emergency at actual cost. So the next time someone tells you cash is trash, ask them how much cash they personally hold. The wealthy don't think cash is trash at all. They think your cash is trash. Their cash is what buys every dip. Their cash is what funds freedom. Build yours deliberately, ignore the guilt, and never be caught frozen when opportunity shows up.